What's going on, everyone? I wanted to make this video to explain to students and to anyone interested what's going on with Silicon Valley Bank. So very quickly, let's talk about how banks work. So banks receive deposits from customers, right? So you put your money in the bank. Those are called deposits. And the bank will typically keep some of that money on hand. We call those reserves, but that could be as low as 10%. So if, say, $1 billion is invested in a bank, maybe the bank is keeping $100 or $200 million in cash in case the customers want to withdraw the money. The rest of that money is then reinvested. So they can give out loans with that money. They can invest in bonds. They can do many different things. The idea is they're going to take that money, invest it, turn a profit, and that's how the bank can make its money. And the system kind of works as long as all the customers don't want their money at the same time. Now, Silicon Valley Bank, or SVB, is a bank that's been around for 40 years. They're not like a sketchy bank or anything like that. They've been around for a long time. They've specialized in startups. A lot of startups have their money there. Okay, so to understand what happened or what's happening, let's go back to 2019, right? So in 2019, between 2019 and 2021, a lot of deposits were made into that bank. So a lot of startups that had raised money deposited that money in the bank. And their deposits grew by about $120 billion from 2019 till 2021. The bank used that money to do a variety of things. Remember, like I said, they're going to take that money and then invest it. So they gave out about $30 billion in loans. They invested close to $90 billion in mortgage-backed securities that were yielding about 1.7% per year, meaning the return on those would be about 1.7%. But that money was locked in for, in some cases, 3, 4, 5, up to 10 years. So they basically locked in $90 billion at a 1.7% annual return for several years. The idea here was that they bet interest rates would stay low for a while and go up slowly, which obviously they were wrong because interest rates have been going up like crazy. Now, when rates go up, these types of investments like bonds, mortgage-backed securities, the value goes down, right? So there's an inverse relationship between interest rates and these types of investments. So essentially what's happening as rates are going up, their $90 billion is shrinking. Now, this still isn't really a big deal because as long as they can hold these investments until maturity, then they won't really lose any money. Once these investments mature, they're going to get back to face value, so there's no actual loss. Again, as long as they don't need the money. Now, a lot of things went wrong very quickly for the bank. First of all, after the kind of in the middle of COVID, when the economy really started slowing down, I guess in the last year or so, startups stopped receiving new investments, or at least it slowed down a lot. So the bank wasn't receiving as many deposits. At the same time, these startups, a lot of which are tech, needed to spend their money. Because they weren't raising money anymore and they needed to operate and things were slowing down, they were spending a lot of their money. So they're withdrawing money from the account, spending it on payroll, spending it to operate. So already now you're seeing that there's money that's needed for the bank to service these withdrawals. That's one thing that went wrong. Then it became kind of known that they had this huge investment that was losing value, right, because of the interest rates. And so on one hand, a lot of venture capital firms started advising the companies that they've invested in to take their money out of SVB because it became too risky. So you had a bunch of clients now all of a sudden starting to pull money out, and they withdrew something like $42 billion. Then you had the issue with the credit rating agency Moody's. They basically set a credit rating for companies the way that we as individuals have credit scores. Companies also have a credit rating. And they were at risk of being downgraded. Downgraded meaning that the credit rating agency would label them as being a little bit more risky, which the bank didn't want because that would not look good and it would probably spook their clients even more and then lead to more withdrawals. So all of this is happening at the same time. So the bank decides that it's going to sell a portion of that investment and take a loss. Remember that as long as they don't sell the investment, then they don't actually have to take a loss, but they decided they're going to sell about $21 billion of the investment, and they took a $1.8 billion loss in doing that. But they said, okay, well, at the same time, we're going to sell stock in the company. So they wanted to raise about $2.3 billion by selling shares in the company. And they had kind of lined up buyers, but they weren't able to do it on time. And as soon as the market opened, and all this news started to make its way around the market, the stock fell 60%. And at that point, it was over for any chance of them selling stock, right? No one at that point is going to invest in the company if the stock just went down 60%. So what happened to them is basically called a bank run. all their clients at the same time, tried to withdraw the money. They didn't have the money to service these withdrawals. And so the government had to step in, seize the bank, close it down, and now they're starting the proceedings of liquidating the company to try and get people back their money. Now, most of these clients are going to have to wait a long time before seeing their money. Some of them had insured accounts, but I think the insurance only covers up to like $250,000. And many of these companies had more than that much money sitting in the bank. So that money is now frozen, and it might take some time for them to operate. And from what I'm reading, it sounds like a lot of these startups are going to have a hard time just making payroll next week because all of their money was in that bank and is now frozen. All right, guys, so that's it for this video. I hope that you enjoyed it. I hope that it was informative. If you have any questions, you can leave in the comments. See you at the next video.